Right, so what we're going to talk about today, the title is Profit Now or Never. And this isn't a webinar I'd planned to do, but I've had two people this year, that doesn't sound like many, but I've had two people this year send me an email saying, I've been looking at trading for 20 years and I still don't get it, right? So I know many of you haven't been looking at trading for 20 years. I hope you haven't been looking at trading 20 years. But if you just have a think about that, what does that mean? It means this industry, this trading industry, has appealed to somebody and that person has been attempting to trade for 20 years. And it's not a situation I'd like to see other people into. And I also think whether you profit or not, to some extent, is a conscious decision. I think some people hold themselves back. Now, before we continue, what I'd like to do, just go through the disclaimer. We are talking about trading today. Trading is risky. You can risk spending 20 years of your life on it. So please bear that in mind when you trade yourself. Now, one thing I will say, it's going to be a bit of an interactive session today. I want plenty of feedback on this. I want your opinions as well. It is the end of the week. If you're trading the S&P, it's the end of a very slow week. So I want us to relax today. So sit back today and relax. We're going to be interactive. Don't have to be on the edge of your seat. Let's have a little bit of fun. Let's have a discussion. So, as I say, we have a trader or two traders that have been in the markets for 20 years without making a profit. Now, the interesting thing about the second trader that emailed me, a lot of times people say, I've done this for 20 years, help. And of course, it's impossible to answer a question like that because it's like, well, what have you done? And, try. So the one trader who's been very gracious and very humble and said that we can actually use his logs in this session today, basically said, I've been doing it for 20 years. I've tried everything. Okay, everything. And by everything, I presume that just means everything from a book, every technical analysis method, every kind of crappy course, and he found nothing worked from him. How do I see the chat window? That's a good question. The only window we can see is the questions window. So I'm going to put that up. Let me know, can you actually see the questions window there? I'm presuming it does let you see that. Okay, you can see it. Right. So I don't see any emails. So let me just go back to the story. So basically, I got the email saying he'd been doing this for 20 years. And I said, what have you tried? And he says, tried everything. What worked for you? The answer was nothing. I said, okay, so how diligently did you log what you were doing? How diligently did you, how diligent was your feedback process of, what was working? Oh yeah, I've logged everything. I've logged every trade, I said, okay, send me the logs for the past 2 months. And the email I got back was the equivalent of, my dog ate it. And I said to the trader, I said, look, there's no point in being dishonest, right? There's no point. If you want somebody to help you, there is no point lying to them and saying things are actually better than they really are. So what I'd like to do before we start, now I did ask you, if you weren't comfortable, I did say, if you want to register to this webinar under a fake name, please do so. Because I can't see the polls. I can't see, poll must be closed. Okay, so we've got a poll up that says, how long have you been trading? And I'll give you the results of the polls all together at the end. Some of you will be new, some of you will be a bit older, obviously. So I can't actually see the results here, but I'll write them down. And I just want you to be honest, one of the reasons to get you to use a fake name here was just to kind of encourage a bit of honesty. Because I'm finding that, when I say, have you done this? And if it's something that person knows they should have done, they'll just say yes, which isn't really the way to go. So we've got, let's just write it down. It's 6 months. It is 7%. We're getting really high tech here. 6 months to 1 year is 12%. 2 to 5 years, 30%, we have a sweet spot there, right? 6 to 10. 6 to 10 years. 34%. More than 10 years. 10 plus is 20%. Okay, so let's just move on to the other one. Okay, and you will see the results in a second. Next one, close that. Second, I'm not an expert on these polls, okay. Sharing the results. Okay, you can see that. I've actually written them down as well. Not much to learn from that, obviously, because that's just how long you've been trading. So let's move to a slightly different question. Click to the next poll. Okay. I've got a bit of a nerdy issue here, trying to get to the next poll. Right, okay, so next poll. Very simple question. Are you profitable? And now remember, I can't see who's voting which way. So don't worry about, I don't want people to know this, da 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 da. Give you a little bit more time with this one. Okay, that's about. And just share the results. So we've got 18% profitable, 82% no. So hopefully later on, when we do the kind of get a bit more interactive, the profitable guys are going to be able to help us out a little bit and telling us what helped them out. Right, so we'll just go to the next one. And give me an approximate count here of how many different things you've tried. I think so many I couldn't give a number was looking like it was going to be the winner there. Oh yeah, somebody's just asking how many people are in the room. We've got about 200 people in the room. So, the stats should be fairly decent. So we'll just... Somebody's asking why. It'll be clear why. Let's just share that with you. Looking for the people who have just tried one. And 23 minutes. We'll just go on to the next one. Right, now be honest with this. So the question is, what I'm trying to say here is, if I ask you tomorrow, could you send me logs tomorrow of the past 12 months trading? I don't mean a trade history from your trading platform. We could all do that. I mean an actual, some kind of log that we could use to see what you're doing and how your performance is improving, right? Okay. Well, yeah, for Joey, if you started 4 or 5 months ago and you got 4 or 5 months worth, that is the last 12 months trading. share that. Yeah, don't all send me your logs. There's 200 of you. Right, so we got 23% logging and 77% no. Okay, so overall, this is where we've got. Most people have been at this for more than 2 years, which is kind of typical for Jigsaw because we tend to get people who have been through the mill a little bit with other techniques. 80% not profitable. Oh, sound stopped. Let me just check that. Okay, does everybody else have sound, or is it just Zane that lost sound? Okay. Send a message to Zane. Poor Zane, anyway. Okay, thanks for the comment on that, on the logs. So basically, we've got 82% aren't profitable. And we can say maybe this is, obviously the 82% profitable isn't just the guys who've been at it for less than a year, right? We've got to say there's obviously that's going to cover a lot of people across many years. Now, if you're in a prop firm, they're going to expect you to be moving towards profit after about 3 months. So the training program will be about 3 months. And we can talk about that a little bit more later. So we've got most of us aren't making any money. Most people have tried 60 to 10. I don't think that was the... most people have tried a number of different methods. And most people have got some kind of log, which is great. So let's just think about a couple of things that most traders... I'm not going to say this is you. But I will say I speak to a lot of traders... Every week, probably I speak to at least 20 traders a week. And what are some of the things that I see are common elements? Everybody loves to click. Not many people like to write a log. And obviously, we all know we should write a log, which is why the guy who'd been doing this for 20 years said he was logging, but didn't do a log. Now, one of the things about a log, if you're losing money, it is very painful to go back and read it. So what a lot of traders do, they like to click, and if they didn't make money on a particular day, even on sim, they like to forget about it. Okay, so you like to do it. It's not very, it's a painful experience, and also many people tend to make this a bit harder for themselves than it actually is. But I also think, if I look at the material that Jigsaw have got out there, that we put out there for free, I also think there is a small problem in that we tell people so many different things. What we've done at Jigsaw, for instance, that is a dilemma across the industry, is I talk to a lot of traders, a lot of professional traders, and a lot of professional traders are quite helpful and will say, okay, you can tell people about this. This is how I trade. You can tell people about this. So, we present many, many different techniques to people, and I think that brings that gets a bit of confusion to. So we're going to talk about that confusion. So, there's a lot of noise coming to you from the industry, and certainly from Jigsaw as well. There's a lot of different methods, a lot of different things you can do. And I think people make it hard for themselves and try and do too many different things. Now, one thing before we continue, the other thing that I see a lot is that the market is fairly cruel. So one of the things when I came into trading, I tried to automate trading initially. And I spent probably a couple of years on that endeavor. And I exited that endeavor because, I'm an IT guy. I wanted to automate trading because I'm IT and I wanted to program my way to trading. But in IT, if you're in software, you can't program something, you can't automate something you don't know how to do. And it was only, when I really, after a couple of years and having a look back, that I thought to myself, well, you can't code something you don't need to do, so you have to learn how to trade before you automate. And so I never actually went back to the automation. But there's a lot of skills that people have, pilots, engineers, that they bring to the market, and the market just doesn't care. It doesn't care what skills you've got. It doesn't care what you want trading to be. So a lot of people, we have a refund policy at Jigsaw, and depending on how active the market is, the refund rate's 5 to 10%. And the most common reason for getting a refund is it's too difficult. I want to do something easier. I want to do an easier trading method. So these people, if you see 82% of people not making money, they come to us, 82% of them not making money. They see tools that a prop firm would use. They look at that and say, no, I want to do something easier. Well, the market doesn't care. The market doesn't care how easy or difficult you want it to be. It just is the way it is. And also, for a lot of people, we see a lot of people that are almost addicted to trading and put in way too many hours. Now, I can tell you as an IT guy, if I've ever got a problem with a system that I've been working on and we just can't fix it or can't find an error, one of the things I'll do is I'll go to bed. Hopefully, it's not in the middle of the day. One of the things I'll do is I'll go to bed, and in the morning, quite often, I've got the answer. So as bizarre as it sounds, a lot of the learning process actually happens when you're not at the screen or when you're not focusing on something directly. So putting in more hours isn't necessarily going to help. And if you look at the guys, you guys out there, you know how many hours you're putting into trading, right? You know, there's people doing full-time jobs and still putting 20 to 30 hours of trading, reading books, trading itself and reading books at the weekend, watching videos on YouTube, all that stuff doesn't seem to be making a lot of difference. The one thing we will look at is logging. We'll just look at the log before we move on. So logging is definitely something that will help, okay? But it will only help if you do it, and it will only help if you are doing it right. Now, there's a couple of things that we'll need to do. Okay, first though, we're actually going to bring across the log of somebody that's been trading for 20 years. Okay, so with this trader, what happened? He sent me the email saying my dog ate it. So he sent me the email saying he's doing the log. I said, can I see it? I don't have it. My dog ate it. And then I said, look, if you're not going to be honest, then don't email me. I'm not interested. If you can be honest, I can help you. But I've got to know what you're doing. And the reply I got to that was a very long email. And I think the guy will admit it was a bit of a whiny email saying, oh, it's not fair, da-da-da-da-da-da. And I got that email and it was like a wall of text. I'm like, whoa, and I'm like, well, I read the first few paragraphs and I thought, well, it's probably not going to get any better from here. And I thought I probably can't help the guy. So I didn't reply anyway. 10 minutes later, I got another email that says, look, I'm really sorry for the email I just sent. That's nonsense. I'm just feeling sorry for myself. I would like to accept your offer of help. And I basically said to him, what you have to do is you have to do a log for the next 6 weeks. Do exactly the same thing every day. Log it, and we'll take a look. And this is the log. Okay, so what I want to do now is I want to go through this log, and I want to get your comments on it. I've got my own comments on this log, but I want to get your comments on it. So we will go through and talk about what I think should be in a good log, and what a good log is all about. Now, what I'd also mention, the format of the log isn't the most important thing. It's what the log is intended to do. So does anybody want to kind of give me an idea of what the purpose of a log is? Can you... oh, sorry, you've got the poll. Sorry. So we haven't missed much anyway, because... okay, hide the poll. Hey, come on. Should appear now. Okay, so here's the log. So some suggestions. Identify trends in trades. Okay, Zane saying help you gain consistency. I would agree it's to help you gain consistency, but how would a log help you gain consistency? Yeah, learn from our mistakes. Let me just put comments up. I think some great stuff here. See your weaknesses, repetitions and strengths. Learn from our mistakes. See what's working and not. I think that's very important to see what is actually working and what's not. Log your weakness. Accountability. There's no MAEMFE, Fernando. You can approach it scientifically, determine what works and what doesn't. Yeah, it's a feedback loop, right? There's a great book on trading called One Good Trade, which, it's actually written by a guy, I think it's Mike Bellafiore, who runs a prop firm for traders who trade stocks. And the book is all about what made the best traders. And he said the best traders were the ones that did lots of review. Now, one of the things with trading methods, right, we can say you've got to observe the markets. A lot of people, you go onto the internet and say, you've got to watch the markets for 10,000 hours and you'll figure it out. Well, that's not really true. You need to have guided observation. You need to be guided in terms of what to look for. And, this isn't my log format, Francis. This is the log format of somebody who's been trading 20 years, right? So I agree, you're right, exactly right in some of the stuff that's missing, right? And, Manfred saying post-processing is as much important as preparation, but absolutely right. But everybody wants to click to enter. I mean, if you go to a trading forum and say, people talking about trading, everyone wants to know where to get in. It's the management, the exits, kind of secondary. But anyway, what I was saying is that the book talks about the most successful traders were the ones that did the best, that were most diligent in reviewing and using the results of that review to feed back and actually make changes in the trading. So it's like a feedback loop. You do some stuff repetitively, you look at how well it worked, and then you use that to make adjustments. Whereas what most people are doing is they're trading, they're looking at the results and then trying something different. They give up. So Mike Bellafiore, I'm sure that's the name, yeah. Fernando, is Crude the best market to trade when you're not profitable? Well, we'll look at that when we talk about some of the trades you can take. I'm not sure it's a bad market, to be honest. But anyway, let's just have a look. So let's just go through some of this. So first of all, notes. Auction Vista indicates an iceberg order at 47.85. Bids firmed at 47.84. Market rallied to 87. I was too slow to exit. Okay, got that. High volume by absorption, 47.85, 47.84. Thinking sellers are not getting much payback. Exited at 47.86. Trying to shorten absorption area. A market appears to be range bound. 112 contracts traded the offer at 47.94. 10 contracts bought 95. 62 contracts hit market retraces. Okay. Buy orders hit the offer. Now, if you have a read through that, anybody got any comments about the notes in that log? Just have a look at the notes in that log. See if you've got any comments. What are your thoughts on the notes there? Yeah, no consistently, unstructured. Absolutely. No context of the market. Absolutely brilliant phenomenon. So it's a couple of things. First of all, almost every trade is different. Okay? Almost every trade there is different. So what you have is somebody that is watching a market and trying to read the market as if it's a book, as if it's a story, which it is, and then trying to react to every different thing that happens. Okay? Yeah, he's not positive on what he's doing. Okay? No mention of how he's feeling at the time. So let's put some notes on stuff we think should go in there. So missing stuff. We've got identified there. Market state, right? Context. I mean, if you're trading one market on its own, it's a tough game because, you've seen in the videos that we've done, the markets tend to liven up and die at the same time. So there's no context. Was the market ranging? What were the other markets doing overall? So you got somebody, first of all, who seems to be focused on just one market and really not aware of what's going on around him or outside of that market, or if he is aware, he doesn't think it's important enough to put in the log. So, for instance, most of the time in here, we've got no idea from this what the overall market's doing. We've got no idea what time of day it is. No mention of how he's feeling at the time. No methodology. Well, the methodology is there. The methodology is I'm going to look at the market and try and react to it. Now, I can see that I'm to blame for some of this because, when we do videos and when we explain stuff, we do talk about the market's going to do this and the market's going to do this, and when this happens, this should happen, and stuff like that. We don't know if it's volatile or flat, Steve, exactly. So when we talk about the markets at Jigsaw and the webinars we do talk about stuff like this. We do talk about, okay, when the market's in a range, you can look for this, and this. When the market's pulling back, you can look for this, and this. We talk about correlated markets, we talk about trade management. What we don't really make clear is we don't say, don't try and do all of that at once before you can trade one setup profitably. Okay, so you're right, Drew. What he's trying to do there effectively, he's trying to read the market, is trying to react to it, right? As Corey says, scalping the wrong direction on a massive trend will get you killed. How long in each trade? We don't know. So he's trying to react to the market, and he's got a different setup effectively each time. Now, one of the things that people get confused about, I think, and again, I might be adding to this confusion, people think about discretionary trading as being like from the hip, completely reactionary, and, you know, kind of random, where a discretionary trader has absolute rules. So for me, you know, if a market is in a range and it then breaks out of that range, I want to see the market move up a decent amount, so I know it's past the area that could be a head fake. And then when the market pulls back, you know, and I want to see that first push out of a range to have decent volume. And then when the market pulls back, I want to see, you know, if it pulls pulling back down, I want to see the market run out of buyers. Now that is discretionary, but that is also a set of rules, right? And that is also a setup, okay? But what we see from this is we don't see any of that. The other thing we see, a very small exit. So he's got in there at 47.84, and he's got out of a he's got out at 47.82, and he's saying he was too slow to exit. Okay, yeah, it's well, in this case, I don't think it was a tick stop in Crude there, Les, because he's saying it went up to 87. So it went up to 87, then it fell back 5 ticks. So I can kind of get that, right? But the pattern of almost every trade is stopping out after 2 ticks. It's almost guaranteeing that you're going to get stopped out on most of your trades. You've not got to just be right. You've got to be right absolutely now, right? Now, we don't know if he's got in on a stop or a limit. So, you know, when we talk about all these things that you could add to a log, you could probably think, man, I've got to add this, and this. You've just got to add enough information that you can go back and tell exactly what happened, right? Now, I agree, 2 ticks is too small. So let's go on a little bit more. Now, we can see on the first day, we've got this level of information. And then we get to, the second day, we've got this level of information. And we can see how many trades he lost. He lost 1, 2, 3, 5, 6, 7 losers and 3 winners. And then we see the log. It kind of gets a bit briefer. Now, anyone want to think why? Yeah, well, maybe Andrew, you're saying if he's prepared to take 2 ticks loss, he should try and make 2 ticks package. Why? Yeah, exactly. Why is he only putting 1 line of text? Why is there only 1 line of text there? He's got frustrated already, right? He's discouraged. He's going through the motions, right? He doesn't want to talk about it, man. He doesn't want to talk about losing, right? And that is exactly the danger doing the log. Now, we can see, got back on the 27th. I don't know. I wouldn't be surprised if this was a Monday. We can see that he then starts to put a bit more information in. But we can see that every trade is still different. You know, shorted at the high, there's a big bid below spoofing, you know, so what? Buying at a big absorption level. I'm paying attention to the volume profile, but I'm getting battered here, right? It's tough, but you know what? He carried on, and he carried on doing it. And some days he was more diligent than other. And then we get to the 10th of April. Okay? Yeah, what's going on? Why is... You're exactly right. You're all right. He's mentally tired. He's pissed off, right? Okay? Go down a bit more. Boom. Goes. So he did the log. He knew that he had to send it to me. I don't think that he doesn't care anymore, David. I presume that's the word care, S and 3 asterisks. I think it's just very difficult for him because the results are so poor that he doesn't want to do it. I mean, you know, if the market's slapping you in the face every day, you're not going to want to keep going back for a couple of months and getting slapped again, right? So, you know, look at the comments now. Don't short when you see a high or low. Don't short when you see a straight up move. He's kicking himself, right? He's kicking himself the moment he's done the trade. Yeah? No idea. Random trade. Okay. Don't fade new highs. Okay. So somebody tell me, I hope he's on sim. Well, here's a funny thing. Look at the results. The results, minus 18 ticks, plus 25 in March. Okay. And he had a minus 63 that week, got a plus 63 this week. Right? Now, What do we think the solution is here? Okay, so it's you've got a good point, Zane. It's a good job doing the log. It doesn't teach him anything about trading, right? Teaching us about what the state of his head at while he's doing this. So again, what's the fix here, right? Reeve's saying trade a plan, right? And I think that's part of it. And I think now we get to the kind of traders' desires. For people who aren't profitable, okay. So I'm not going to ask you directly because your name's up there, right? And I don't want you to have to commit to being profitable or not. But traders don't come into the market, right? Traders don't come into the market to make 2 ticks a day, right? Traders come into the market with big dreams and they want big wins. So how many people here would be happy to make 4 ticks a day? How many people would be on Crude just to make 4 ticks a day? How many people would be happy with that? Okay. B2 on bonds. Okay, for whatever market, okay. Because what I find is you've got a lot of people, they don't want to make 4 ticks a day because they want to make 100. And I think it's okay to want to make 100 ticks a day. I don't think there's really anything wrong with having that as a goal. But I think what gets in the way of that is that people, they don't want to make 3 or 4 ticks first, right? So I think you're right. So I think what we've done at Jigsaw is we've given a lot of information out, and we've given a lot of good information out, and we've given information from many different traders, many different perspectives, but we've never sat down with you and said, overload, Reeve. We've never sat down with you and say, good Lord, don't try all of this at once, right? Take one bite at a time. So my suggestion, if you were trading Crude, okay, so let's take Crude. What would be a good trade on Crude? So if this guy's trading Crude, what do we think would be a good setup on Crude for this guy to trade? Any suggestions? Doesn't matter if you give a wrong answer. There's no wrong answer for this. Well, a 30-tick stop loss, possibly, Fernando. 4-tick pullbacks. Longer time frame is interesting, okay? Your 4 ticks a day is $1.5 million trading 100 contracts, but you wouldn't get away with trading 100 contracts on Crude. Okay, so I think some good ideas. I would say longer time frame KF is not the answer, and I think that's one of the problems. We were talking in the Jigsaw chat earlier about longer time frame trading, and one of the things that people will say to me, try a slower market, possibly. One of the things that people say to me is, I've said to people, try scalping, and they say, well, I want to try longer term trading first. And I've said this in a few webinars where, if you look at my pre-market prep that's on Futures.io, I was doing that for a few years before I put it on Futures.io, and I started doing that on Futures.io in May 2013, right? And I'd been doing it on Trade to Win before that, and I'd been doing it for a while before that. And I can tell you, if you look at my prep this week, you can see that on each day from the prep this week, doesn't happen like that every day, but each day there was stuff you could have traded based on that prep. But the only reason I could do that prep is that I'd already been doing it for 6 to 9 months before I even started to publish it. So if you want to trade long term or longer time frames, you've got to look at least 6 to 9 months before you become proficient. So at least 6 to 9 months of diligently doing a prep every day, seeing how it works out, going through different states of the market, looking at your prep again at the end of the day. What did you do wrong? What did you do right? Which of your hypotheses worked? Did none of them work? Doing that, there's a long lead time to getting that right, because you only get to try one prep per day. So the idea that long-term trading is easier than short-term trading, scalping, I don't agree with that. I think I have some difficulty conceptually with that, right? So what I think, I'm going to give you one potential trade. So Gary's saying, I think order flow is the last part of the puzzle. The thing is, if you go to a prop firm, all they will let you trade off when you first get there is the dome, right? they'll sit you in front of Xtrader, possibly CQG, and they'll sit in front of the dome and they'll make you watch it and make you watch it and make you watch it until you can get a few ticks, right? Now, once you've got to that point, you're kind of on your own. You're kind of on your own in terms of they'll let you do what you want. I mean, they'll actually let you trade unprofitably for as long as you can't afford to eat. So you go to a prop shop. We had a guy that was in the Jigsaw chat a few years ago, and he went to a prop shop in London, and he was getting a salary of £500 a month in London. He got cashed in his life savings, £25,000. He was getting £500 a month, and that £500 a month they gave him for 6 months. And after that 6 months, he was sitting in that chair free of charge every day. And every day he kept changing what he was doing. He just wouldn't commit to one method. So you can stay in a prop shop pretty much as long as you want. They'll let you keep the chair as long as you want, right? There's no risk to them, but they make you start off short-term trading, and then once you get profitable, they have no objections with you using long-term volume profiles, market profiles, stuff like that, which you can do if you're profitable, making 5-10 ticks a day. You can start to do longer-term analysis every day until you get good at it, right? But if you're not making that 5-10 ticks a day, you are starving, or you're staying with your parents. Okay. Now, the prep is available at Futures.io. It's also on the Top Set blog. Define prep. Well, I tell you what. If you want the prep, just send me an email after today, and I'll point you in the right direction, because I want to point you away from prep. Now, what I would say on crude oil, it's probably not very busy right now. Looking at crude, if you were to trade a market like crude, so this is just test data, don't worry about this. I'm not actually in a trade. One of the things with crude, if you've got a big range, is quite often crude will push, and then it'll consolidate a little bit and push and consolidate and push, and it puts in a lot of momentum moves. You could have 10, 20 momentum moves a day. So one of the things you could do is just study the momentum moves on crude. And just say, right, I'm going to take one setup. I'm going to look for momentum moves on crude. I'm going to wait for crude to be directional. And for that, I need some support from other markets. And then when crude pulls back and it looks like it's going to go in the original direction again, I'll take a momentum trade. I'm not saying that's the only thing you can do. But you could do that, and you could just do that every day and only do that, and write down what the other markets were doing, what the volume was like, what the depth was like, exactly what was going on when you took that setup in crude. And you can trade that one contract. You can trade it on Sim, because with Sim, your fills are going to be about the same on crude, or you could trade it on a CQ demo account. But if you just traded one trade and diligently did that every day for 30 days, do you think you'd actually see some progress, or do you think you'd actually learn something from that? I mean, what do you guys think? I'm not saying it's the best trade. I'm just saying, if you try to take momentum trades on crude, surely you would see something at the end of 30 days that would give you feedback to either stop it and find something else, or that actually in that 30 days, you actually got better. There were certain market conditions where you actually improved. Now, Philip is saying very few people have the patience for that. Remember what I said before about the market doesn't care? So the market does not care if you have the patience for it. Okay? So I'm not saying it's the best thing to do or not, but if you don't have the patience for it, Philip, what is the alternative? What is the alternative of just saying, I'm going to take one trade. I might want to get to a position where I can take 10 different setups, and there's going to be a setup every 5 minutes. But if I take one trade, I know there's not going to be a setup every 5 minutes. Surely you would see change, right? But you'd need guidance on what is worth looking for. Well, absolutely, you would need guidance, and that's what they do in prop shops. In prop shops, they do something that I would call guided observation, where 25% of the course in a prop shop is they teach you stuff. They tell you what to look for. The other 75% is you're looking for that yourself. So, Drew, one of the reasons I said this about crude is there's a drill on the Jigsaw site. Let's just go and get that. Let's just There's a drill on the Jigsaw site. There's actually a couple of drills, but there's a drill on the Jigsaw site that is actually quite interesting for that. So let's just bring that across. If we look at the... So we've all seen this, the drill, new to Jigsaw tools, the one-tick trading drill, the cut and reverse drill. The cut and reverse drill here is basically, if you did the cut and reverse drill on Crude, you would start to get a feel for those runs on Crude, because you're trying to, Crude is an ebb and flow market, up and down, and that drill would very much help you with kind of getting to grips with the way that Crude moves. So the reason I said the momentum moves on Crude are interesting is because there's actually a very specific drill that is useful on Crude that will help you learn to observe that and actually see for yourself. Okay. So yeah, you would need guidance, but I think, is it guidance in terms of holding your hand every day, or is it guidance in terms of telling you what to look for at the start, and then you going away and taking ownership? And I would agree, Corey, something that works on sim will have a different result with real money for two reasons, obviously. One reason is that sim fills are different, which is why we recommend doing CQG demo accounts, because the fills are different. The other reason is because you've got real money on the line. And I think there's a couple of solutions for that. One is, if you've got if you don't like having real money on the line, I think Top Step Trader or programs similar to that, where you have a combine and you have to pay them for the combine, and somebody else is going to be reviewing your results, right? That is having some skin in the game without having skin in the game, right? So doing a Top Step Trader combine is a lot cheaper than losing $300 a day, and it's kind of not real money, but you have some skin in the game. In terms of the fills, I think you just have to use a CQG demo account. Now, in terms of your psyche, I think things like a Top Step Trader combine account will help. But yeah, psyche has a place in it. But at the end of the day, if you have some confidence in what you're doing, right? If you have some confidence that something works, right? You should be able to tell when your psyche is getting in the way. You should be able to tell that. So you shouldn't have to question the method and your psyche. You should know which is getting in the way. Now, KF saying, regarding time frames, struggle with the choice with FT 70 hours long time frame and something close to seconds and minutes. How short is too short? I mean, I wouldn't scalp Crude for a tick, right? I think if you were taking momentum moves in Crude, there's going to be some days where you can't do it, and we've had some days on Crude, certainly in the past few months where Crude's been useless. We've had the S&P has as well. Crude's been useless. I think you'd have to still be patient. There'll be days when you can't take trades, but I think on Crude, you take your average morning, you should get 5 or 6 good opportunities to take that. So I'm not talking about taking a trade every 30 seconds. I'm talking about doing one thing that's going to occur a few times and taking advantage of it, finding out when that's advantageous and just taking advantage of it. Okay. And the ebb and flow, and the reason I'm talking about this is Crude. I could talk about other trades, other setups, right? But I just want to give an example. And Crude isn't a bad market, but there's other markets that move really well. You've got the mini Nikkei that moves okay. You've got the Bund. The DAX is probably a bit dangerous. The Euro does sometimes. You've got the grains. You've got metals. There's lots and lots of different markets, right? Now, the exact momentum entry technique is basically you've got to study momentum. The first thing you have to do is you have to get some confidence. And one of the differences between retail traders and at-home traders is at-home traders want somebody to spoon feed them entry, management, exit, right? And the problem is you get spoon feed by someone, and then a lot of the time they want to watch somebody do it. But basically somebody spoon feeds you a technique, but you don't really know if it works. So you lose confidence when you come to execution. So Eric, what is the exact momentum entry technique? That is the wrong question to ask, right? The question to ask is, if I do the cut and reverse drill, will I be able to find a decent momentum entry technique? And the answer to that should be yes, right? But you have to be self-sufficient as a trader, because nobody's going to hand you something, because everything is based on your observation. And nobody can put their eyes in your head, right? So there's this big thing in trading that people want to rely. They want to get given a technique. They don't learn how the markets work, right? So go back to the prop shop. Prop shops spend 25% of the time teaching, 75% of the time bullying the traders into watching the markets to see the things they've taught, right? But they're not teaching them setups. You know, they will show them videos, trade videos, stuff like that. They're not really teaching them setups. They're showing them how does the market behave? Watch these behaviors. Now, can you exploit the behaviors? Okay. Now, Martin, if you're profitable on the one tick method, you need to find another broker, because you need to find a really cheap broker. I think you just have to, you're not going to make money trading for one tick with retail commissions, right? If you're really, really good at it, which is certainly possible, then you could make money. But like, if you literally can't stand to hold a trade longer than a tick, you have a very specific problem, because I know some really, really good scalpers, and I know scalpers who scalp for a tick, but they'll take 5 or 6 ticks when it's available, right? So that's something you'd have to work through. What do prop shops teach that 25% of the time? They teach some theory stuff. They teach the order flow. They teach about market manipulation. They teach about interest rates and stuff like that. If you go to, there was a company called Futex, or there is a company called Futex, and they had a really good prop level course. There's a lot of the traders that left Futex are going to a company called Axia. And I'm not sure if I'm announcing this earlier, but they're developing a course. So you will be able to get prop level training online. But basically, they're just teaching them how the market behaves, right? And if you know how the market behaves, then your next step is to take advantage of some of that behavior. So if you know how the market behaves, right, you could, when you're not very good at trading it, you could start to think, well, the market's starting to behave differently. But you'll see that the market's not behaving differently, and you'll know it's you. Okay? So what this guy, for me, this guy here, very typical story. I don't want to hear somebody in this webinar today coming to me in 20 years. Well, I hope I'm not doing this in 20 years, but I don't want to hear somebody saying I'm still at it 20 years later. So a prop shop, 3 to 6 months. Everybody in this room could be profitable in 3 to 6 months, or realize that it's not for them. Because I think if you diligently did the logging and stuck to one trade and really made sure that you wrote down everything you were doing in such a way that you could go back and know exactly what you did at the time. You could go back a couple of weeks later and look at any trade, know exactly what you're doing. If you did that and you couldn't improve, or you kept getting away with yourself, I think you could probably say after 3 to 6 months, I gave it a good try, but it wasn't for me. What I think the problem is right now, a lot of people don't have the information to make that decision, because they're all over the place, and I think if you're all over the place, you don't know if you could make it or not. This guy's been doing it 20 years. He doesn't know if he's got what it takes to be a trader or not. He's had no direction, right? He's got, you could easily go and buy a different course every week, right? You could buy a different course every week, and every course would come with a different technique. And when it didn't work, you would have no idea what to do, right? I mean, how many of you bought courses on the internet to teach you how to trade that told you what to do if it didn't work? Did anybody ever? Are there any courses out there that tell you what to do if it doesn't work? Somebody's laughing. Well, good, Gino. Good. That's good. I'm glad to hear there are some out there. But in the main, from the stuff I've seen, I haven't seen anything that says, well, when this doesn't work, then, here's what you do. A lot. Yeah, Andrew, don't call us back. Yeah, Andrew's just had some experience of that, actually. So yeah, it's an interesting thing, isn't it? It's not going to work all the time, obviously. What do I do if it doesn't work for me? How do I know if it's me or the technique? How do I know I'm not doing it right? So yeah, you're broke. So anyway, that's the log. I mean, you've seen the log. I'm gonna start helping this guy out a little bit, the next few weeks, and see if we can kind of get him on the right track. There's also somebody who's never traded before, that I hope is in here that I'm going to be helping out. What I'd like to do is that, this industry sucks so much that, this 95% failure rate, I used to think it's because not everybody can trade. But I just think the industry is responsible. I think the industry is responsible for that number, and I'd like to see that number go up a little bit. Or at least for people to know when to get out, right? So, if what we can see, is reactive trading. He's trading without any rules at all. On some days, pretty much every trade's a loser. There's only one way every trade can be a loser on a day. So if you've got trades that, if you've got days where your trades are all losers, the only way to do it is to sell, the market goes up, and as soon as you see the market go up, start to buy, and then the market goes down and you sell. And as the market swings up and down, you're just following it up and down. If you do that, you can get a really high loss rate. But it's the only way I know to do it. Otherwise, it's almost impossible to do it on purpose. Yes, David, that is the right email address, peterdavis@jigsawtrading.com. Some days are better than others, right? How can you have a log and not say what kind of day you were having? And I don't mean market profile has 5 day types. It's got to be this day or this day or this day. It was a shit day. It was boring. There was no volume. It was really thick. Explain it in ways that you can relate to, because you've got to relate to it when you come back. I don't have many different day types. I have 3 day types. I call them day trader days, when there's a lot of speculation going on. I call them, other time frame days, or days when we've got a lot of long-term repositioning coming in, the higher volume days that are directional. And I've got days that are just really slow because nobody's doing anything, right? I've got 3 different types a day. It wouldn't take much long. It doesn't take that long in a log to just have one column in a spreadsheet to have day type 1, day type 2, day type 3, or crap day, slow day, lots of volume, or it's died now. You could do that and see very easily afterwards what went on. Same for your different types of trades. You could say momentum trade. And then you could even search on your spreadsheet, momentum trades, how my momentum trades do. Oh, thank you, Gary. So trade types, correlations, market state, how you manage a trade, trading off one trigger. The guy, most of his log is oriented around getting in. And of course he gave up, which we don't want to do. And it's, you've got to give this guy some credit for saying that I could use that log today, right? I think we have to give the guy some credit for that. Now, a good log. So for me, 1 line per trade. If you're going to do anything with spreadsheet, right? If you put every trade on 1 line with your losses and wins on 1 line, you will actually be able to use Excel to sort and filter and just do stuff like that. So I'd put a trade type in there, so that if you've got a couple of different setups, you can actually sort and filter by the trade type. You've got to have the P&L per trade, and your notes should be extensive. Now, it is not easy to log your trades. So how many people have trouble writing their log? And when you're actually trading and writing your log, what kind of problems do you have? Because one of the problems I have is I have a hard time writing it right there because I'm trying to watch the market just after I exit. And I've got a memory like a goldfish. Yeah, you lose focus on the market. I've got a memory like a goldfish. It has been recorded, William. So my memory is like a goldfish. So when I come to write my log 5 minutes later, I've forgotten why I got in. As ridiculous as that sounds. So for me, I have to type it there and then. I have to keep my spreadsheet very close to my order entry. And I just have to do it. If I don't do it, then even 5 minutes later, it's just gone out of my head. So I think when you, when you do the log, you've got to kind of build it around you. You've got to build it based on, you're going to read it. You've got to be able to, understand it later on. But you've also got to be able to do it without interfering with your trading. Videos are great, but videos still don't tell you what you're feeling, why you got in. And videos are also a bit lengthy to review. So I think it's good, if you've got 3 hours for trading, it would be really good to spend an hour and a half trading and an hour and a half going on for the video. But the video is not going to help you 3 months later, right? And maybe you find a way to do this, but so you've got to make it so that you can actually do it at the time and put enough information in there, but without kind of throwing your trading off. Yeah, Philip's saying, I tried to do it in a spreadsheet, but it's too hard. Thing is, Philip, it's not too hard. It's just difficult. On Notepad is perfect, right? Notepad is perfect. Because one of the things about Notepad, you don't have to move your mouse and your keyboard around. But, this can't be too hard. It's just what you got to do, right? But I think you've got to do more than just a recording on a video, because it's the notes. It's what did I do and what worked. And it's to also let you see what's working. You've got to be able to, you've also got to be able to, do some stats on it, basic stats, even if that just means adding up the number of ticks per month or the number of ticks per week, so that you can actually see, is this particular trade getting better, right? Does it feel easier? Am I getting more used to it? Because, one of the things is trading is a skill. And like any skill, you've got to be bad when you start. And that's a dilemma, right? You're going to do something where you will absolutely be guaranteed to be bad at it when you start with any new setup. But on the other hand, you've got to log it and actually read that log, which by definition is going to be bad. So you've got to get used to reading that bad log, right? Interactive trade log feature on Rapid Trader. Very, very good idea. Just give us a little bit of time. A video where you verbalize what you're seeing as you enter exit. I think it's good, Doug, but like if you wanted to review 6 months trades to see how you were doing, how would you do that if it's 6 months worth of videos? It'd be very, very difficult to do. Okay, so that's pretty much what I wanted to cover today. It's a bit of it's a bit free format. It wasn't script or anything. I think everybody's got some options. We all go into QA, but I think everybody's got some options of what to do. Your first option is to give up. Spend more time with your friends and family, right? There's no shame in stopping, right? None at all. Because it's better to stop than spend 15 hours a week for 20 years and get no rewards, right? Another option is just do what makes you feel good, right? Just keep clicking. Because everybody loves to click. Everybody loves to get in and out of trades, right? But nobody loves to review the results if they weren't good. You could keep doing that for 20 years, right? That's an option, absolutely an option. But make no mistake, you're making that decision by not doing the next one. So you can either do it properly. And I think do it properly, you start with one trade type, one specific rule. Even if it's discretionary, it still has a rule. Or we can call it one setup, right? And there's people say, well, yeah, but I want to make more than a few ticks, I want to buy the low and then sell the high. I don't like short-term trading, but. There's all this kind of stuff that's going to come to the floor. If that's how you feel about it, you got to say, how is that going to work, man? If prop shops don't do that, if prop shops don't have their traders buying the low of the day every day when they start, why on earth do you think you could do it? Right? If you want to buy the low of the day or sell the high of the day, and that's the way you want to trade, why aren't prop shops teaching their traders to do it instead of going for 3 or 4 ticks, right? So it doesn't matter what you want to do, right? But this is one of the options. This is as I see it. Everybody's different, right? Don't set my word for it. Fact is, though, if you keep doing what you've done, for the 84% of you losing money, if you keep doing what you've done, you are going to get what you got already. You are not, unless you make changes to something, and I don't mean changing technique every week, because that is exactly what you're doing, right? I mean, we sat in a Skype chat room for 6 months while this guy was in a prop shop in Futex in London, and he was there every day, and we were like chatting with him while he's there, and we're saying, just listen to your instructor, don't change. And, the one Friday he said, yeah, I'm not going to change anything again. I'm just going to keep doing what I'm doing. And on the Monday, he sent me an email and he said, Pete, I've got my chart set up like this now. He said, what do you think? And I said, dude, you said you weren't going to change. And that was Friday. He said, well, I'm not changing the way I trade. I'm just changing my screens and changing the chart to look at. And I'm like, dude, that is the definition of changing the way you trade, right? So if you keep making changes, that isn't what I'm talking about now here. So do what you did, get what you got. I mean, if you keep changing it, that's also doing what you did. Unless you can say, right, I'm going to do this and I'm going to keep definition. Prop trader, 100 trades a day, no. And again, it's probably worth talking about that because it's not clear. A market maker, scalper, would trade 100 trades a day, right? But most prop traders aren't that high volume. So they are more. I mean, most prop traders aren't that high volume, specifically because the teachers in prop firms aren't good enough, right? So the art of market making and trading that high volume is almost a lost art now. Right? There's very, very few people that can do that, right? So what they do at prop firms isn't like traditional market making, but they are going for 3 or 4 ticks. But if they're doing like 3 or 4 trades an hour, I would see that as high volume, and you could confirm that with a prop trader. But when you talk about the really, really high volume trading, you're talking about more market making techniques, stuff like Gary Norden does. And Gary was like on the floor of the Liffey. He was the youngest trader on the Liffey floor in London. He was on the options pits. He was trading on the floor in a bank in Japan. He's a long in the tooth, old school market maker, and those skills are way above what most prop traders do, right? So it's not 100 trades a day. And yeah, Drew, my bad days are when every minute I want to find an opportunity to trade. And I think that's what the trader in the log was doing. He's looking for trades. He's not waiting for the setup. It's an old cliche, right? Wait for the market to come to you, right? But it's right. So if you have one setup, just wait for it to happen. Right, there's a few weeks ago I was bored on the S&P, and I took a few trades, like momentum trades on Crude, and it was just sitting there, 10, 15 minutes, one came up, nothing, 10, 15 minutes, another one came up, just a couple of trades, that's it. If you can take 5 or 6 ticks, I think you're good. Yeah, Joey, my best days are the days where the first trade loses, because I sometimes come into the market a bit flippant, but I would say, yeah, best days are the ones with the fewest trades. For me, a good day is 2 or 3 trades. Sometimes a good day is no trades, right? There just isn't anything there. The S&P has sucked this week, Reeve, but if you go over the prep that we did, I'll just find that. Well, I shouldn't show you that because it's long-term trading again. S&P has sucked, right? And S&P is going to continue to suck. I think there's an inverse relationship between how volatile the market is and how crazy the president is. It shouldn't be like this. But I would say, look at different markets. If you want to look at markets, look at Crude, look at DAX, look at there's loads of markets out there. There's the grains. There's all kinds of markets. You don't have to just look at S&P and Crude. Now, am I all in, all out? I like to scale out of a trade. But the exception is if a market is just running one way all day. Now, what I'll say for prop traders is that there's days where they're just in and out in 10 minutes. And then there's days when the market's running one way and then they tend to load up, right? So there will be days where the market just runs one way and they tend to load up. And on a day like that, I try and scale into a position. And a lot of times those one-way days, they are pretty volatile and you need wider stops. So it's better to just go in with a trade, with a contract at a time. But most of the day, the market's not going to be like that. Most of the day, the market isn't going to be running wildly. So I think what you do is, you've got your trade, you've got your setup, and you trade your setup, and you log it, and you log it, and you log it. And if you're not profitable, you don't do anything else. If your log at the end of like 30 days doesn't tell you something, then you need to review the way you log. And I'm quite happy to look at logs. If you log for 30 days, or if you log for a few days, send me a log and say, am I missing anything? I don't mind looking at that. But your log's got to tell you something after 30 days, or something's just not right? You're either logging wrong, or you're not sticking with it. Another thing to put in your log is how well did I stick to my plan? Was it a random trade? Anyway, I think you get the point of what I'm trying to say, and what I'd like to see is I don't want to see some, in my retirement home in 30 years' time, some old guy come up to me and start waving his Zimmer frame at me because he spent 30 years trying to trade and didn't make a bean, right? That's not where I want to be. Don't want to get hit by a Zimmer frame. So on that, we're kind of near the end. Do we have any questions? Are you sure you're getting the point? If somebody gets the point, I'll be happy, Andreas. No questions. I don't have a format to share, to be honest. I think how do I scroll the DOM with the scroll wheel, Eric? I don't have a format. I think the format isn't relevant. It's what's the intent? What's the intent of the log? If you look at what the log's trying to do, you'll have a format. If somebody's got a good format, you can send it to me and I can put it on the Jigsaw site and send it out to the people in there. Would it be worthwhile to do a log by marking all the info you mentioned directly on chart and then print the chart at the end of the day? Absolutely. Absolutely. Your log doesn't just have to be a spreadsheet. You could put, you could have screenshots and stuff. You know, I used to do one folder per S&P contract. So trading the S&P, I used to have a folder for the June contract, a folder for the September contract, and every different contract used to be in a different folder. I used to just put all the stuff in there. But absolutely, good idea. If there's demand, would you entertain the idea of a mentorship? I don't know. I'd entertain pretty much anything if it wasn't 30 minutes past midnight. Guys, there are some more drills. In fact, I'll tell you where to get the drills, because I don't know if you know the Price Squawk guy. Price Squawk. Price Squawk. Do you know the Price Squawk guy? There's a website called Price Squawk. Right, this is worth a look at. And dun. Let me. Right. There's a prop shop skill trading development course, right? Where there are more drills than the ones we've done. And so this is good. Let me just put that in there so you can, hopefully you can copy it. Have a look on that that page. I know Graham. I work with Graham. I talk to Graham a lot. He's developed this kind of audio product for the markets. Really good stuff. He's got a lot more exercise on there. So I think if you want to see more, this is a really good place to look at. Okay, and there's the link. Eric, we'll have a look at that offline, yeah, Eric. The Futex story as it goes. I'm not sure if I'm supposed to make this public, but basically, one of the traders at Futex tried to cash in. So obviously, there's a profit split. The traders get paid on a profit split, and one of the traders tried to make a withdrawal, and there was no money there. And so that was the end of Futex. But the Futex Live company, I think, was a different company, so they're still selling the training, but the prop shop's effectively gone, as far as I know. But a lot of the traders that were at Futex have now gone to another firm. And again, I don't want to make announcements of what the firm's called and stuff like that until it's all official. But I'm not sure if it is official or not at the moment. But yeah, they've all gone to a different. They all went and basically found some investments, set up their own prop firm. But it was a legitimate, proper bricks and mortars prop firm. Okay, so we seem to be out of questions. It's called Axia. Thank you, Daniel. So yeah, it's a prop firm called Axia, and so we are working with them. Right, Rapid Trader, you have to buy from Jigsaw. AMP we just have a close relationship with AMP, and they help us out a lot. So that's why we work closely with AMP. But you buy it from Jigsaw. Corey, it depends where you are. To be honest, probably Axia is the best one. You know, they've got relationships with Eastern European, South Africa, Australia, London. So they've got, you know, they're not just in London. Certainly they're a set of really good guys. To be honest, what a lot of you should do for a track record, to get into a prop shop or as a goal for trading, is just get a track record and then, you know, go to a few prop shops. I actually met a guy last weekend who's got a prop firm with 900 traders, but it's all Forex. So there's plenty of prop firms around. Yeah, Mighty Norseman, I love the name. Yeah, you're making some beginner errors. Let's just hope you can actually, let's hope you can move on from that, you know. Where can one find a good scalping setup? Well, Joe, I think your observations of the market are what will lead you to the setup. And I think the search for a setup is what's killing most traders right now. But if you do some of the drills, you know, if you look at the introduction to scalping video that we did, there's 5 or 6 scalping setups in that video, right? So I think that's a good place to start. Would you extend the sale you had for a week? No, because my salesman won't let me. I've never used it. Alan's asking about software for journaling. I've never used any journaling software, so I can't really comment. I mean, I always like to have it on my PC and like to have it on my spreadsheet, so I kind of as a personal thing. One of the problems I have is web pages. It might be a pain in the butt to use an Excel spreadsheet, but it's a real pain in the butt to use a web page most of the time to enter stuff. For a trade, how long do I plan to stay in? It just depends on the trade, depends on the setup, basically. But basically, I'm getting in, whenever I trade, I'm getting in because I expect the market to pop. If it doesn't pop, then certainly I'm expecting to pop in the next few minutes. If I'm in a trade 15 minutes later, I'm in for a completely different reason. It's not my trade anymore. So it's just experience more than anything else. Like scalping, the guy earlier said, I scalp. I'm always out for a tick. I can't hold any longer. Well, it's just a matter of experience. To take those opportunities, because if you're scalping, you're watching the market every day, and you watch something every day, you're gonna start to see different things in the market. Does Jigsaw offer an insight into where unfilled orders may reside? Well, every limit order is unfilled. And the thing about hiding your orders, right? If you hide your orders in the futures market, you're at the back of the queue, right? So with an iceberg order, the orders that get added when the iceberg orders are being executed, the orders that get added are going to the back of the queue. Right, but with futures, everybody trades on the same market. Right, there's one exchange, so everybody can see everybody else's stuff. On stocks, you've got dark pools where you've kind of got off-exchange trading, quite a lot of it as well. And then on futures, nobody can see anything. So on futures, it's pretty fair, and for the guys hiding, they're at the back of the queue. So I think that's a pretty good deal for us, basically. Yeah, one tick's different on every instrument. Yeah, absolutely, Jim. And you've got the ultra bonds UB, which is $31 a tick, and it's quite volatile. It moves quite well. You look at the ZB, it's a bit slow. You look at the UB, it's the same tick size, but it's a bit faster. Anyway, I don't want to stay here all night. My wife's not going to talk to me in the morning. That's already not going to talk to me in the morning, but I would hope to have a conversation with her on Sunday. So I'm going to have to let you go. I would like to say thank you for all your input. It's really good to see, get a bit of feedback and some really good stuff. I wish you good luck in moving from the 84% to the profitable side, the 16-17%. As usual, if you've got any questions, email me. If you want to send me a log format, we can work on a good log format together. That's fine. And good luck. And I will see you all in the next webinar. So thank you.